Let's stay with the thematic of currencies now. Chris Gore from GoMarkets standing by in Melbourne. Chris, let's just rewind the tape a little bit to where we sat Friday and then what has happened in the ensuing period to take us to where we are now, which is about 92 and a quarter.
Yes, hi Carson. Yeah, on Friday we saw some mixed news across the US. Obviously the equity markets came off somewhat, over 150 points. So this certainly weighed on investor sentiment and created a risk-adverse environment in the markets. And we did see, however, in the currency markets, it translated to some mixed signals for the US dollar, and it didn't result in the general risk-averse scenario flock to the high-yielding, or the low-yielding, I should say, currencies of the dollar and yen, although we did see a mixed result across the dollar. And even on the euro, this managed to squeeze out some mild gains as investors predicted the bailout conditions to be decided and the austerity measures to be decided. So this is a positive thing for the market. And since then, we've obviously overnight we've seen Europe come out and announce that the austerity measures of Greece will in fact involve a number of things. And of course, we know that the bailout package now involves 110 billion euros, which is to be distributed over a course of 3 years. So what we're seeing at the moment is a relief rally. Sorry, Carson.
No, and I think that was a very interesting point you've made, and just at that point, so is it a timeline factor? Because the volatility index, the VIX on Friday spiked 20%. Are you saying we were really at the height of our concerns over sovereign debt, and then Europe kind of eased our concerns then on the weekend?
Well, I believe that we're certainly at the height of the concerns. I mean, but in terms of what's going to happen from here on, the premise of a country obviously needing a backstop or needing that particular bailout package is certainly not good for the state of the euro. And of course, we also know of Portugal and Spain's debt issues, and I think that will certainly play out. And I think that we obviously we have reached the height on Friday or on Sunday last night when the agreement was reached. It's a very positive thing for the market, and it may translate for some short-term support for the euro. But in terms of what happens from here on, I think we really cannot write off further sovereign debt issues. This will continue to plague the market. So
short-term support for the euro, meaning what? The next 24, 48 hours and thereafter a pullback, or a more concerted hold to where we are at the moment?
Well, as this news filters through the market, and we've already seen it this morning, we've seen the euro with some mild support. I believe we're looking for some short-term through the course of early this week. So you could be very much right, 24 to 48 hours. But I'd hate to put an exact hour on that. But of course, I think at some point throughout the week we will see some of the finer points or further conjecture in terms of Greece's need for this bailout package to sort of plague the markets. And I don't think we've heard the last of it. I think this is going to continue to play out, albeit on a much more subdued level.
All right, let's just also ask ourselves, Chris, about our dollar, because interestingly enough, we've got some statistics released today on housing, another piece of the puzzle for the Reserve Bank and a decision on rates, and a critical one at that, of course, owing to the high running nature of house prices. How do you see the currency responding?
Well, at the moment, the currency hasn't really responded that much. Last I looked, it was sitting on par with Friday's close, which is around about 92.4 cents. So not a great bit of movement out, fairly subdued open. A little bit of support through the market this morning. We did see it open mildly lower, but it seemed to come up quite around about 20 pips or so. But at this point, there's no breakout of the currency. I think what we'll see over the course of the day, equity markets play out in terms of currency movements. I think the currency will be contingent on what happens in Aussie stocks. We'll be looking to our resource sector today, and I think that will certainly will dictate the direction of the Aussie dollar, and of course further conjecture ahead of tomorrow's interest rate decision, which is expected to be a 25 basis point hike.
And you're with that GoMarkets house view, they'll hike by 25?
Absolutely, yeah. It seems like a convincing argument to suggest that 25 basis points will be the hike. And of course, last week we had inflation figures which suggest that inflation remains at 2.9%, or is up at 2.9% year on year. So this seems like a very convincing argument for interest rates to be risen by 25 basis points. And we cast our minds back to the minutes in April. It also had some fairly bullish words there, and things like it would be prudent not to delay adjustment for the April interest rate decision. And of course, there was a case for further steps in the process of returning interest rates to normal levels. We know those normal levels to be around the 4.75 to 5%, and some may suggest we're heading around the 5.25% level.
Chris Gore, do appreciate it. All will be revealed in just over 24 hours. For now, many thanks.
Thank you.